What's going on, y'all? It's your boy TK, aka the Market Ventriloquist, and today we're gonna do an end of week recap. First and foremost, I'd like to say thank you all for watching and tuning in today. It is a pleasure to be sitting here speaking in front of you and for you to be listening. As I promised a few people in my Telegram chat, I will be making YouTube videos consistently starting today, so be sure to subscribe if you haven't already. Today is the start of a new series that I call EOW, aka End of Week, in which I take the price action of either EU or GU and walk through what happened on the week on the pair. See, I understand we are doing this in hindsight, right? We already know what happened on the pair, but it allows us to analyze what happened on price since we have the answer and try to ask ourselves questions that get us to that destination. Pretty much, we're building a case study for why price may have bought from here, why price may have sold from here, so that we can understand the movement of price within the markets. This is a little bit different approach than normal back testing, but honestly, I've seen a lot of results from being able to do this. It builds your confidence in being able to build case studies and models around things that you may have seen happen before. So with that being said, let's go ahead and hop into TradingView. Now, in front of us is a chart of GBP USD on the daily, and we're always going to do a top down in these videos. I'm more of an intraday trader, but it's good to know where your swing points are because it allows you to see the overall direction of the market and have targets of where price may start to bounce, start to retrace, and do other things. As we look at this, we see the daily is now bearish as we had a low, which made a high, higher low, a higher high, and then a break of structure. Once we drop down to the H4 time frame, we can see that H4 is bullish, right, opposing the daily structure, which means that the daily is currently pulling back. We had this high go, create a higher high, a pullback, higher low, then a higher high, and then we saw a swipe of liquidity here, and then we started seeing price move back in the bullish direction. It's important to note that when you're drawing your structure, this is what I do, I'm not saying it's what everyone does. I like to use body candle closes to signal to me that structure has broken to the downside. If structure fails to close, I see that as a liquidity swipe of the range and expect this high to still be weak within the market. Now, the reason for that is, as you can see in this example, if you thought this was bearish on H4 and you were drawing these supplies in this area, then as we know by the end of the week, looking at this, right, you would have been losing trying to sell in those areas because structure is technically still bullish and price may have just needed some more liquidity to run and go higher, which is why it swept the external range. So let's go back now to Monday and look at the price action on Monday. I'm going to drop down to M15 because it's the time frame I analyze for intraday, right? I'm an intraday trader. So this time frame I use my entries on. I draw my demand and supply zones that I'm looking to execute on. And pretty much the time frame I operate in for the most part after giving a framework behind the higher time frame structure. We had the swipe of the low, a push up, pull back, another push up. We had a swipe of some liquidity here. And the reason that's a swipe is because this is like an internal low. If we went down to M5 in that area, we could see like a minor low get set, price push below that into demand and then break higher. That's a nice little small subtle swipe of liquidity there. And then we seen price buy up, create another high. We've seen some inducement be created here where price pushed into that and then started to buy up. Now, the thing about this is that at this point in time, right before market open on Monday, the way I was seeing this is that you have supply in the market, but you also have demand in the market. We know we're overall bullish and that we should be making a higher high on H4. It's just a matter of, is it happening now? How are we going to get there? Is it going to be from this demand? Things of that nature. But we see a liquidity swipe here and a push downwards. And then we also see some liquidity here tagging into this demand, which swept liquidity here. So it's like a matter of who's in control of this market at this point in time. And sometimes that's a bit ambiguous, right? So I wanted to see a little bit more for me to get involved in either side of the market. And coming into London Open, one thing I saw in which I was looking for sells is that there was some internal supply here, which got swept out. And then we saw this happen on price, where we got this big candle push down. And when we go on M5 to observe that, we can see this is what I call a liquidation pattern, right? We call it a like a breach, where you have price push higher, right? Break a low, inducing people to sell this, because you're gonna think lower low. Let's do that. But what price doesn't said is that this becomes liquidity. Since we didn't have any prior liquidity in the zone, we sweep it, inducing people to sell here, and then we break lower and then pull back and then go. For those of you familiar with like Wyckoff schematics, it's kind of like a distribution schematic, is what I think of it as, right? So pretty much that's what I'm seeing. And I was expecting price to sell from here. So I actually put a sell limit in the market there. But coming into London Open, we didn't tag it, and then we made a push lower. Now, because of that, I then deleted the limit. It was no longer valid. And we started to see price tag internal demand, which was partnered with the Asian low. Typically, I see Asian high, Asian low as liquidity. But in this instance, on this day, it actually worked and bought up. As I think to myself in hindsight, right, at the time, at that point in time in the day, I was not necessarily confused, but I was like, why is price kind of questioning, why is price buying off of that and leaving all of this liquidity, right? And we're going to have the answer to that in hindsight in a moment. And this is exactly why we do this exercise in this type of video. Nonetheless, that buys, pushes us higher, and then we have a break of the structure, right? The structural high. So now, if you see these yellow dots, that is the structural point. We have this low, this high, higher low, and then a higher high up in here. Now, I'm going to go on M5 in here and look at this, because I want to show you guys exactly what I was talking about that same type of schematic. When price makes a higher high, what are we expecting at that point? It's potential for a pullback, but we can't just hop into pullbacks, sells, counter trends without confirmations. And this is one of those confirmations. I seen price break down here, leaving some supply, inducing people to sell, right? Enticing them to say, yeah, we got to break a structure. Let me get in. Price buys up, takes that out, and then makes its move lower. When that happened, this was a zone I was definitely interested in selling, but I tend to cut my trading window off at 11 o'clock, maybe 11:30 if I'm loving the setup. And because this was kind of trend, I wasn't comfortable pulling it at 12:15, which is a little bit after London close within here. So I did not take anything on this pair. That pretty much gives us Monday. Now, Monday is over. You know, we're going to have a lot of dull period in the market, and we're simply waiting for Tuesday. So Tuesday comes, and we see liquidity gets set on both sides. We got Asian high, Asian low range, right? And you have to ask yourself, okay, which way is this likely to go? Well, the first thing I'm looking at is, what are we structurally? We're bullish on like M15 swing, but from here, we're bearish on like the internal structure or lower time frame structure, right? Like this is like an M5 breaker structure downwards. And this has happened at the high point in the range. So we are in premium pricing with an M5 break down here, which means that we could see M15 begin to pull back. Something to keep in mind. Now, coming into London Open, we've seen price swipe the low in Frankfurt, then go and take the high and swipe that as well. So it's like, who's in control here? That's one thing to always think about. Who's in control? There are a few things, right? Timing is one. Is it happening during London Open, New York Open, London session, London close? Like, when is it happening, right? That can be a clue. A structure is a big one. Supply and demand is a big one. Liquidity is a big one. There are a few things that you're going to want to look at. But what I'm seeing here at that point in time, right? And this is in hindsight because I missed this trade as well. we saw a break upwards, and then we seen the M1 shift back down. So M1 broke structure bearish, and this is kind of like an internal break up bullish. There's some demand here because we swept the low, but then there's also supply here because we swept the high. So it's like kind of like the example we saw on Monday, where either one could happen. We just need some type of confirmation for one or the other. But we should be leaning towards the supply winning in hindsight, of course, because of where we are within price, right? We're in the extreme of the range, or we're in the premium of the range, I should say, right? And there's liquidity targets to the downside. So when price breaks M1 here, makes this lower low, pulls back into the supply, you don't have to pull that right away. One thing you could do if you're unsure, instead of just limiting this, is let price show its hand. What do we see here? Price breaks this internal high, pulls back, another internal high, pulls back, makes a higher one. And then what does it do? Takes that out. So literally it breaking this internal low is the signal that, all right, we're probably ready to go back down. And what does it leave? A supply right in this area. So this is where your entry would go. Right? And look at the timing when that happens, right at London Open. So that allows you to take an entry there. And the way I manage my trades, I always take a third of my position off at about 1 to 3.5, and then 1 to 10, depending on how far I expect it to go. And then for this one, like I would have took a third at 1 to 10, again hindsight, and then another one maybe right in this demand. Right, that I would think that's the best way to manage a trade like this. And this is a potential 1 to 24 type of trade. Right, I'm giving out a little bit of sauce right now. I'm not gonna lie, but this is pretty much how price moves. Right, we're in the extreme. We're in the top of the range of supply, and then we've seen price sell down towards liquidity. And where is it heading, right? Where is it heading? It is now heading to demand right in here. And the reason it's heading to that demand is because as we look at structure, we had this high, this higher low, and then a higher high. So this is structurally weak, and price should be looking to target that. And where is it going to do that at? Of course, it does it at a demand that has taken liquidity and has inducement, right? It has liquidity to grab before its entry. This triple bottom, people are looking at this as resistance or support, I should say, drawing a box over or a trend line or whatever, and expecting price to bounce off of this. So it's using that as some type of liquidity to push lower into here. Price gets into here, and here's where I could have limited that zone. I didn't. I was looking for a lower time frame entry, and we just missed what I wanted. What I was looking for was price to break this internal high here and then pull back, but we kind of reacted to it, failed to break it, and then like mitigated this before going up. So that was unfortunate, but opportunity to pretty much catch this sell in here into a buy entry right down in here. Right, so you could have sold here and then put a buy limit in here because this was structurally correct. And then what does price do? It leaves this little supply here, which I labeled as a trap, because people are looking to sell this now out of FOMO since they've already missed the first sell up in here, enticing more people to sell. But what happens? Well, this is structurally bullish. So yeah, they get a reaction, but look what happens at news. Right, kind of takes them out, comes to demand, moons upwards. Right, so they get taken out of the market and induced, and then price ultimately buys up for the rest of the day. That was Tuesday's price action. So if we ask ourselves in hindsight, why did price buy? Well, it's because we were bullish. This zone swept liquidity. It had inducement, and yeah, and we also had liquidity to go grab up in here now. So that's one of the reasons why demand continued to hold, and we saw price moon upwards. Now it's Tuesday. Wednesday was an interesting day because let's go to H4. We can see on H4, we hadn't taken this high yet. So in my head, this is the target, right? I should not be trading opposing that target. If I am, I'm trading in the wrong direction. So while this swipe of Asian high and a break of structure is something that I may take in a bear market, to me, it is now a trap because we're in a bull market, right? Meaning when I say trap, it's just something that's enticing you or making you want to do one thing, but it's in the wrong direction, right? Now, if you did this in a bear market, it would work. But in a bull market, we want to stay away from that. So what does price do? It takes that out. Now, after price takes that out, we do a little pullback. I didn't see much that we could play or buy off of in here, right? Nothing that I would consider high probable. So price kind of trickles up, pulls back, and then again, it comes back to some demand, but it's not really high probable because we don't have any type of institutional intent. We're not seeing any liquidity swipes. We're not seeing any inducement, right? It's not much for us to really go based off of and know that this would hold. I just drew it afterwards in hindsight, right? As, okay, this is where it played. Kind of seeing, is there a reason as to that? Not necessarily, right? So Wednesday was more of a wash day where there wasn't much to do. And as we look at the day so far, Monday was kind of a setup day for Tuesday, and Tuesday allowed you to sell and then buy. Wednesday was kind of a continuation day, but not really a trading day to take advantage of. And then that led us to Thursday. So here we are at Thursday, and what I started to see on Thursday was, if we go to the daily, price got into this daily supply right in here, right? We see price got into that daily supply, and within that daily supply, there was an H4 supply in here as well. So price gets into there, and it starts to sell off a little bit. But one thing I said in my Telegram chat was that I am looking for sells. However, I'm not seeing the intent behind sellers and the control behind sellers in order for me to enter. There was some bearish order flow here on the lower time frame. We could see price pinging supplies, breaking lower, right? We kind of ping this supply. We break lower. We leave another supply here. We ping that. We break lower. But it wasn't enough for me to really get involved in it. Look how slow and kind of flowy it was. I wasn't seeing swipes of liquidity and then intent down or pushes down, right? It was more so like kind of healthy pullback action. So for me, I was like, I'm not really getting involved in anything like that. And I sat on my hands. But one thing that I want to know is that at the end of the session, what we saw was that price hit some demand. If we look on a 1 hour, right, you got this 1 hour demand right in here, which was order flow off of this demand right here. And we saw on M15 kind of an internal break back to bullish. Now, after we seen that internal break, right, that was pretty much the end of the day. But that set us up, like I said, some days are just setup days. It may set you up for the next session, the next day, or whatever the case may be. So this kind of set us up for the next day. And what we saw on the next day was something that was very clean. I alerted it in the Telegram chat. Shout out if anybody caught this with me. We were able to catch, I think it's like a 1 to 6 on this, right? Yeah, about a one to here is about a 1 to 3 and 5.5. I think I fully closed at like 1 to 6 on this. And we were able to catch this because this was a setup day where price cleared supply, right? We had a break of the supply chain. We had an intent push up. We had a minor swipe of liquidity on the lower time frame. We can see that price, kind of what I spoke about before, right? Price is buying up. Price breaks down, inducing people to sell, and then swipes back up. So I saw this as a swipe of liquidity. This was like the extreme M1 point, and kind of drew out the M15 box and the M1 box. I didn't want to get left, so I just limited the M15, but limiting the M1 in this example would have been fire. So I seen liquidity. I seen liquidity targets up in here within this trend line, within the Asian high still intact. I saw inducement be created within this kind of trend line being formed above the entry. And I just threw a buy limit right on this area. About a 9 pip stop on this with spread. And we kind of get a movement away. Now, I also took a half risk stack on this, which I will show. Where, just move this out the way for a second. I saw price come into here. I seen, this is my M1 low, right? I'll go to M1 so you can see it. We had this M1 high, a lower low. We had price come into the supply, attempt to sell. We failed to do so and then bought higher. So then I went on M5 and I'm looking at this, right? This institutional candle, this IFC right here. Price taps that. And that's where I put my stack. I had half risk on that stack. It eventually then broke even, unfortunately. But I was still in the limit. So price, kind of plays around, kind of swipes a little bit more liquidity lower, and then breaks back up. And then from there, it was just a matter of smooth sailing. I waited to here to go break even. I seen the supply here, but I knew that was going to be a trap. Reason why I have that as being a trap is going to induce people to sell, because people are seeing, oh yeah, this is this little kind of FU candle, W top, a swipe of liquidity, and a break downwards. But as we see looking left, that's in the wrong direction. Structure is currently bullish. So trying to sell that against structure is just inducing people to sell. That gets taken out the market, and we see price start to buy up and go hit those TP points. I closed 50% of my position here at 1 to 3, and then I closed the remainder of it at 1 to 6. So I was able to net 1.5 R from this trade, and then I was able to net 3 R from this trade. And that allowed me to make about 4.5 R on the day. So long story short, as we review GU, talking it through, we see that there were about 3 good trades to take on this pair for the week. There was, or high probable, I should say, in my opinion, right? Monday, we didn't really have much, but that set us up for Tuesday, which allowed us to sell and then buy on the same day. Then Wednesday, we didn't really have much either. Same thing for Thursday, but Thursday set us up for Friday, and Friday allowed us to get in this buy right here. With that being said, that is the end of our very first EOW. If you enjoyed the video, please be sure to like, comment, and subscribe. It is greatly appreciated. I'll also make sure to post my Telegram in the description below. That way you can keep up with my analysis on EU and GU daily. It was a pleasure. I look forward to seeing you guys in the next one.